When Americans think of theme parks, they might think first of the big ones, run by Disney and Universal in Florida and California. But there is a pretty good chance the last one they went to was far closer to home. In terms of locations, smaller regional theme parks make up the lion's share of the theme park industry in the United States. And the biggest player in that business is a billion-dollar company called Six Flags. Founded more than a half-century ago, Six Flags grew from one park in Texas to a chain of 26 parks all across North America. It draws tens of millions of visitors every year, boasts some acclaimed cutting-edge rides, and holds licensing deals with major entertainment companies whose characters populate its parks. Summer is peak season for theme parks in America, and companies like Six Flags ordinarily rely on this brief window for the bulk of their sales. But of course, heading into summer of 2020, nothing looked ordinary. And theme parks large and small entered their most important season with deep concerns they would not be able to survive the year at all. The coronavirus pandemic has forced closures of all kinds of businesses across the country, directly threatening shops, restaurants, travel, and tourism, and pretty much any business that can draw a crowd. For a brief but tense period, there were fears the virus would be catastrophic for Six Flags and its closest regional competitors, SeaWorld and Cedar Fair. The coronavirus hit Six Flags after an already bad year and compounded some concerns investors had had about troubled plans to expand its business. Not content to remain the biggest theme park chain in North America, Six Flags had embarked on an ambitious international expansion, with a business model that promised low costs and generous profits. However, those plans have been on the rocks, and questions remain as to whether the growth management had promised will ever materialize. Now the company appears to be refocusing on its core business back home, sprucing up the parks it already has, figuring out how to operate in an era of social distancing, and hopefully drawing pandemic-weary customers back in. Amusement parks have a very long history that, according to some historians, stretches back centuries in Europe. They began popping up in the United States toward the end of the 19th century. The largest amusement parks, such as Disneyland, Disney World, and Universal Studios, were started in the later decades of the 20th century. But smaller regional parks have their own history and a bit of a different business model. Disney and Universal are massive properties that draw customers from not only all over the country, but all over the world. Visitors, often families, dedicate entire vacations lasting days to park visits, and these parks draw enough customers to support entire local economies consisting of hotels, restaurants, and shops. Regional parks, on the other hand, tend to operate at a much more modest scale. Visitors tend to come from no more than a couple hundred miles away, and often spend only a day riding the rides, playing games, and snacking. These parks also tend to be regional monopolies, whereas Disney and Universal compete for visitors in Southern California and Orlando, Florida. Regional parks, with a few exceptions, tend not to have much nearby competition. Some of these parks are independent, but many are owned by a handful of larger companies, and Six Flags has emerged from a sometimes tumultuous history as the biggest player in the tier. It opened its first park in Texas in 1961, called, simply, Six Flags Over Texas. Its founder, Angus Wynne, had previously made a fortune in real estate. He saw the opportunity in creating parks that were more local and affordable for people around the country. Situated about halfway between Dallas and Fort Worth, the park took its name from the flags of the 6 countries that had flown over Texas throughout its history. The early park was divided up into 6 sections, each with a different theme. More parks followed around the country. A few were built from the ground up, including Six Flags Over Georgia and Six Flags Over Mid-America in St. Louis, Missouri. Both were spearheaded by Wynne himself. As the company grew, it began adding other parks, mostly through acquisition. Its growth was astonishing. Six Flags revenues rose from nearly $25 million in 1994 to nearly $1.5 billion in 2019. In the mid-2000s, Six Flags struggled through several years of often steep losses that saddled the company with $2.7 billion in debt. It was partly hurt by the recession, but other factors contributed. It had been acquired in 1998 by a company called Premier Parks, a real estate firm that had seemingly stumbled into the theme park business. Premier Parks bought Six Flags from then-owners Time Warner and Boston Ventures, using $900 million in debt to finance the deal. A proxy battle engulfed the company in 2005, led by Dan Snyder, an entrepreneur who also owned the Washington Redskins NFL team. Snyder and his allies won the battle and attempted to pivot away from solely running parks to more of a diversified media business. During the tenure of CEO Mark Shapiro, a former ESPN executive, the company took a significant stake in Dick Clark Productions, which produces the Golden Globes and American Music Awards. But that plan did not work out, and Six Flags entered Chapter 11 bankruptcy in 2009 as the country was plunging into the depths of the financial crisis. It re-emerged in 2010, relisted on the New York Stock Exchange, and began a highly successful streak, delivering 9 straight years of record sales. Shares reached an all-time high of $72.76 on June 20th, 2018, up dramatically from the $9.75 reached on May 11th, 2010, when the company had commenced trading again. But shares have fallen since then to around $20 a share on June 24th, 2020. As of 2020, there were 26 parks across North America, 23 in the United States, 1 in Canada, and 2 in Mexico. The company pulled in $1.5 billion in sales from 32 million guests in 2019. Six Flags parks are theme parks. The company has licensing deals with Warner Brothers, which owns the Looney Tunes characters, such as Bugs Bunny and Daffy Duck, and DC Comics, which owns rights to Batman, Superman, Wonder Woman, and a cast of other characters. A typical park takes a minimum of 4 years and $500 million to $700 million worth of investment to build, according to the company. Their parks do range in size. Most are somewhere in the 100-acre to 350-acre range. A few, primarily water parks, are quite a bit smaller, between 30 and 70 acres. But the company does have one massive park totaling over 2,000 acres, the combined Six Flags Great Adventure and Safari and Hurricane Harbor Park in Jackson, New Jersey. That has 3 sections: a theme park with rides, a safari park with animals, and a water park. Most parks are open from Memorial Day through Labor Day, though some parks will operate for special occasions out of season, such as around Halloween. And the Six Flags Magic Mountain Park in Southern California runs every day of the year. But 75% of the company's revenues are earned in the second and third calendar quarters of the year. Overall, the business is relatively protected from fierce direct competition, rather stable if seasonal, and perhaps above all, fun. But 2019 was not easy for Six Flags.
Six Flags had a really bad 2019. So before anybody was talking about coronavirus, Six Flags was moving in the wrong direction. A big part of that was, to your point, their international business, which they've been talking about for 5 years, right? And the idea is that Six Flags would leverage its brand. They would, in an asset-light way, partner with international developers to open theme parks around the world.
The company had planned to expand its presence beyond North America into Asia and the Middle East. The deals on the table looked rather attractive. Six Flags had offered to partner with local firms in some countries in those regions and offer its brand and its expertise in designing and running parks. In exchange, local partners would handle the actual development and construction of the parks. Essentially, Six Flags would be able to license its brand and act as a kind of consultant, saving it development costs and offering very attractive margins. The company and its partners in those countries did secure land deals, but then problems began to pop up.
It started to get derailed almost right off the bat with the Vietnam project. It just stopped getting talked about by the company. And it was one of these underlying concerns that investors started getting when the company would come out one quarter on the call and say, we've got these great international plans. The park in China is getting developed quite nicely. And then they wouldn't talk about a park, and an investor would ask about it, and they would say, oh, the developer actually backed out of that deal, or we're currently suspending that deal. And so that happened in the case of Vietnam. It happened in the case of Dubai, and both of those parks ended up getting canceled completely. In the case of China, which was the biggest one for them, they kept pushing off the parks each quarter, and I think it got the investors a bit skeptical.
The company at one point had plans to open up to 11 parks in China in partnership with a Chinese real estate developer Riverside Group. However, Riverside Group defaulted on its payments to Six Flags due to an economic downturn and a declining local market. A plan to open a park in Dubai had previously been canceled. Amid these challenges, Six Flags appointed a new CEO, Mike Spanos, in October 2019.
I'll be interested to see how they continue with further international expansion, because their newest CEO, Mike Spanos, does have a lot of expansion experience. He took Pepsi from being kind of a floundering company over in Asia to being a very successful Asian brand. And so he does understand the connections over there. He knows how business is conducted. And so I think he can get them to the next level. It's just a matter of when he wants to undergo that type of transition again, because they want to focus on the domestic parks first.
Six Flags did not comment on this story. As the coronavirus began to hit businesses around the US, concerns about the future of several industries, not to mention the entire US economy, abounded. The virus put the three large regional amusement park chains in a mixed position. The first obvious point: these are unprecedented times, and there was no way of knowing when visitors would be even permitted to visit parks, and whether they would want to. On the one hand, the park season doesn't begin until May, so the industry was spared some of the initial shocks many other industries felt from the pandemic. On the other, it seemed reasonable to assume the pandemic was going to hit the industry at one point or another. Little was known about how long the pandemic would severely affect the country. Even once restrictions were relaxed, how many visitors would be allowed into a park at a time? What kind of revenues could a park expect? What are the costs of doing business and the potential liabilities of remaining open? Initially, there were real concerns among investors that 2020 would be a disastrous year for Six Flags and its closest competitors.
The three regional amusement park companies, so SeaWorld, Six Flags, and Cedar Fair, all went to, they had various debt offerings, convertible offerings that really ensured that, even given the level of uncertainty, that even if the entire theme park industry were shut down well into 2021, that they would have the necessary capital to survive. So that was the first order of business. Those stocks were trading at really pennies on the dollar, because there was some real concern in the early stages that maybe one or multiple of these guys wouldn't be able to make it.
Financial safety net secured, investors have their eyes on the company's plan for reopening. Investors are looking at 2020 as something of a throwaway year. The damage coronavirus is doing to many industries is not the fault of bad management, bad products, or a failure to adequately serve customers, or even financial irresponsibility. In fact, some are optimistic that good years could be ahead for Six Flags and the theme park industry.
Longer term, I'm a big believer that this is the type of activity that once there's a vaccine, and once people feel like they can do it safely, I think people are going to flock to back to this type of activity. I think there's an excellent chance that 2022 could be a record year for the industry, because again, people want to get outside, they want to spend quality time with their families. I think theme parks are a good outlet for all of that.
These parks tend to fare reasonably well, even in recessions. They offer a modestly priced experience a family can fit into a day trip, rather than a full vacation complete with hotel stay. Lenders often like amusement parks because they are pretty profitable. The coronavirus may actually spur some investments that stand to make Six Flags parks more pleasant places to visit.
As a result of the pandemic, these companies invest in technologies that maybe the returns on those investments weren't there in the past, and that's why they never got around to them. But as we sit here today, they're the cost of doing business, I think those investments will long-term make for a better user experience.
Management had little trouble securing the money the company needed in its recent debt offerings, which investors say is a recognition that the current conditions Six Flags faces are very different from those it faced leading to its bankruptcy in 2009. International expansion plans appear to have taken a back seat, and the company seems to be focused on its core business in parks.
I think in the coming years, you're going to see some even greater innovation with what they can do with the roller coasters, whether it's creating an immersive experience like a 4D coaster that has virtual reality, or using any other type of technologies that maybe some of the bigger players like a Disney or Universal have used for a couple years that Six Flags is able to get at a lower price now.
Though the company will likely have to take measures to limit the potential spread of the coronavirus in its parks, consumers tired of being cooped up in their homes may be eager to get outside and ride some roller coasters.